Welcome to another stock market update after the market closed 24th of February 2023. As your individual stock trades go, they are like ships on the ocean, which is this S&P 500, the overall stock market. It's one of the biggest lessons I think you could make is how your individual stock trades are affected by what the overall market is doing, both in the short term and the long term. So let's check in here. If you don't know what I'm looking at, don't forget, go and check out the free bonuses where I show you how to read charts for free. And in the meantime, I'll just sort of walk you through it. So the downtrend that was the bear market was broken recently. And I'll draw a trend line to show you that, as I have been drawing all through this commentary. So there it was. That's a downtrend. But then it broke above this a few weeks ago. And as I explained then, that was the end of that downtrend, which you might say it was the end of that bear market. It's not to say it's a new bull market or that even a new bear market can't form, but it was the end of that one. So what happens next was the big question. And I said, well, this should mean higher prices ahead, but not before a big pullback, which did happen. But I must say, this last week surprised me. It was quite a very aggressive pullback that actually pulled this thing to the brink of failing in terms of creating a upwards trend, breaking out of the downtrend. But it's right on the edge right now. The market really needs to hold in this position for this move to stay intact and not sink down into another terrible downwards trend. So keeping a close eye on that this week. I do keep feeling, though, the emphasis, looking at the charts I generally look at, the emphasis is, the underlying currents here are this market just keeps wanting to push higher, but it got spooked this week by some inflation data. But you see this red line here, the 200-day moving average, as long as it stays above that, like it did on Friday, in fact, it bounced off of it on Friday, which was an optimistic sign, then, this move should remain intact to the upside. But it's not without shaking off a few bulls first. The moon cycle is in our favor. I commentate on that a lot, and it's absolutely for real, though it didn't help things last week, and it usually should have done. But we have a week still left of the good moon cycle. Let's have a look at the Dow Jones, which is the one leading the whole upwards move. And this, like everything else, it had a big pullback this week. Which, and all the news channels and talking heads love that because it's a big drama, and it was a aggressive down week, but the chart remains intact from a technical point of view. In fact, we have a nice little support line cut out there. As long as where the Dow closed on Friday, it needs to hold there and stay above that for this move to be intact. But all charts are still saying the same thing. We had a nice breakout to the upside end of the downtrend, but we had a pretty aggressive pullback this week, especially to the Nasdaq, which is right on the edge of that 40-week moving average, the all-important blue line there. But this move remains intact. So as long as things go higher this week, then all should be well. Let's check in with the dollar. In fact, I always check in with the dollar, but I thought this week, let's check in this is for Forex traders. It's either the dollar or everything else, because everything's pegged against the dollar. Check in with the euro this week. Let's look at the euro, because the euro is showing, like the stock market, a great signs of ending the downtrend and then a pullback this week. So as long as that holds there, then the other currencies, the pound, the euro, all the other things like that, should also be pulling out. And that makes sense because people go to dollar when things aren't looking that great. So this is perhaps more instructive than looking at the dollar chart, which does point to the same thing the markets are pointing to. There is hope here. Let's look at bonds. This is still disappointing, and this is what's keeping interest rates high because nobody's buying the bonds, and it really needs to climb above that 106. And again, that pulled back this week, so it still has its work to do there. Copper, Dr. Copper. This has been the canary in the coal mine, and that's why it's called Dr. Copper. It's used in so many industrial processes, and it defied its downtrend, a bit like the stock market, and is trying to pull out. Just like the stock market, pull away from this and start seeing better times ahead. So that is a good bellwether, once again, of better things to come. Gold, which is really just doing the opposite of the dollar, and it's all over the place. A very trendless chart here, and no surprises there. It's just, coming down off of a very overbought position. It's going to swing down here, and still waiting for a trend on gold. Very confused, which kind of flies in the face of this whole inflation narrative. Okay, let's look at oil, and this is still in a downtrend. Oil has really had its best day behind it now. The moving average is curling over. The price is remaining below it in a sideways shuffle there. seeing lower prices at the pump that reflect that. So oil is looking bearish all the time. Let's look at the retail sector. What is the customer actually doing? And that's this one here. XRT is the ETF of retail stocks. And you can see here, just like the stock market, ended its downtrend, pulled back above its 40-week, pulling back, and that move remains intact, just like the stock market. We can see it here. There's a line of support there now. The moving average is starting to curl up, which, and as an important question, well, then if retail is looking hopeful, then why is Amazon still in the dumpster? As far as last time I checked, Amazon pretty much dominates retail. So that means one of two things. That means either this chart is wrong or the other chart's wrong. I say this chart's wrong. Amazon is looking really cheap here. Just would double its value just to get back where it was. And like I said, if the retail sector is anything to go by, which is probably more representative basket than Amazon, then you can see here it's looking hopeful. And that's one last thing. Let's just check in with America's housing market. There it is. There's home prices, had the boom, cooling off there. So everything as you'd expect there. So what's the big takeaway? I say this week we are going to, as long as that level holds there, as long as we can stay above 3970 on the S&P, I think we're coming out of the still coming out of the bear market, and we should be still having a nice bull run ahead. Not a new bull market just yet, but I'm still expecting that upwards correction because there's still so many overpriced good stocks. I will speak to you next week.